2025 is starting to shape up as the worst real estate market since 2008 because what we're seeing now is a sharp slowdown and in some markets a full-blown price collapse not seen since the Great Recession, and the latest data confirms it. Home prices are falling in over half the country while supply has surged to a 5-year high as existing home sales just hit a 6-month low according to Redfin. And this is all happening in the middle of the spring selling season when things are supposed to heat up. Even Zillow is forecasting falling home values in 2025 despite a slight uptick in sales. Folks, that's not fear mongering. This is data that's coming out. And if you're not paying attention, you could be walking into the biggest wealth wipeout since 2008 in real estate. So let me break down what exactly is going on with the housing market right now. So far, this is the worst spring market in 15 years. March, April, May, these are traditionally your peak buying months. But this year so far, we are flatlined. And according to the National Association of Realtors, April home sales fell by 0.5% from March 2025, and home sales are already down by 2% since 2024. Now, I want you to look at this chart. It shows existing home sales have been declining since 2021. Ironically, that's why prices stayed elevated. You got fewer buyers, fewer listings, and sellers sitting on those ultra low COVID interest rates that they've been hanging on to for the last 5 years. And while interest rates dipped briefly in April for a moment, demand picked up, which makes sense because, well, when interest rates go down, people naturally take advantage. But just as quickly, that momentum evaporated as interest rates jumped over 7%. That's the highest since February, and mortgage demand has tanked ever since. Now, here's the twist. Some homeowners are starting to give up those low COVID interest rates and are starting to list their homes on the market. Problem is, the buyers have vanished. And let's talk a little bit about demand right now. Simply put, buyers are done putting up with this real estate market. We're talking about overpriced homes, 7% plus interest rate mortgages and high monthly payments. Even if you negotiate a $50,000 price cut on a $500,000 home, you're still looking at a $4,000 a month mortgage. That's not necessarily a deal for a lot of people. That's mainly a trap. And the problem isn't that interest rates are high, it's just everything that's going on. You got prices still too high, wages are not keeping up, and inventory, it's either garbage or highly overpriced. And I actually went house hunting here in North Atlanta with my sister who's buying a home, and we were looking for options in the $250,000 range, $300,000 range, and guess what we found? Basically nothing. And the same can be said for most areas across the country because it's not about supply anymore. It's just that prices have gone off the rails. And with that said, I want you to know that there's no longer a housing shortage. Now, I know that's what we've heard from people in the real estate industry and economists for the past 5 years. Because according to Redfin, new listings just hit a 3-year high and current inventory is at 1.45 million units. That's 20% higher since 2024 and 9% more since last month. Meanwhile, sales fell by 3.2% last year and total inventory is now at a 5-year high. So inventory in some of the largest markets is now back to pre-pandemic levels. I want you to look at the Atlanta metro area. For example, current inventory is sitting at 25,402 units as of April of 2025. And we're going to compare it to 23,527 units in April of 2020. The same can be said for the South Florida market of Miami, Fort Lauderdale, and West Palm Beach. Inventory is currently at nearly 52,000 units for sale, which is higher since 2019. And inventory in the Orlando metro area has completely skyrocketed. We're sitting at roughly almost 14,000 units, levels that haven't been seen since the Great Recession. Same thing for inventory in Las Vegas, and the same thing goes for Los Angeles and the Phoenix metro area. Those areas are getting swarmed with new inventory, especially Phoenix right now with over 1,000 units more than 2017. And really the list goes on and on. Now, I definitely want to be fair in this video, and I want to mention that the market is not collapsing in the entire country. In the Midwest and the Northeast, inventory is still very tight. For example, we see tight inventory in places like Milwaukee, low numbers compared to 2020. Same goes for New York, where inventory is creeping up, but well below 50% from 2019 levels. Still very competitive, where sellers clearly have the upper hand over here. But it is a fact that in most of the country, supply is exploding while demand is imploding. And when supply rises without demand, prices eventually have to start falling. And I think the best place to see that happening is Punta Gorda, Florida, where home prices, according to the Zillow Home Value Index, are down by 12% from the 2023 heights. Now, I want you to take a look at these month-over-month home price drops in these states. In Florida, prices dropped by 0.55% since April. In Colorado, prices dropped by 0.54%. And in California, prices are down by 0.42%. Now, these are month-over-month numbers. And as we annualize these small monthly drops, we see that's actually a very big deal, because a 0.5% monthly decline equates to roughly a 6% annual loss. That's the same pace that homes appreciated during the 2021 boom, and except that, well, basically we're seeing everything moving in reverse, with interest rates well over 7% and tariffs uncertainty looming around. There's really little reason to believe that things are going to improve anytime soon. And if these things persist, what we're looking at, folks, is a 20 to 30% decline in home values over the next 3 to 5 years if things don't change. So just like 2007 and 2008, things didn't happen in 1 or 2 months. It was a slow, steady, brutal market where people were dropping the prices of their homes every single month until things broke loose. Now, just so you can get a better idea, a $500,000 home losing 0.5% a month would be like losing $2,500 in equity every 30 days. And in 1 year, we're talking about a drop of $30,000. Now, if you factor in inflation, where CPI may be at 2.3%, but real world inflation is closer to 6 to 7% according to Forbes. So if home prices drops by 2% in 1 year and inflation is at 6%, then you just lost 8% in real value. Folks, that is not just equity gone, that's wealth erosion, as most everyday Americans count on their home equity for long-term wealth. And if this is happening this spring, imagine what the fall and winter housing markets is going to look like. If you think residential is bad, commercial is an all-out disaster. For example, take a look at this headline. 2 Denver skyscrapers, once worth over $200 million, sold for $3.2 million. That's not a typo. That is a 98% loss. Downtown Denver has a 34.9% vacancy rate. In Portland is even worse at over 35%. The damage doesn't stop with landlords when it comes to commercial real estate, because vacant buildings equals to lower tax revenue, which equals to city budget holes. And that means cuts to schools, roads, police, all because downtowns are dying. And in a city like Miami, office construction just hit its lowest level since 2017. Even Zillow, which is the optimist of the real estate market, obviously they have a business that is geared towards selling things to the public and to real estate agents, is starting to sound off the alarms. In May 2025, they forecasted a 1.9% decline in home values nationwide. And Zillow isn't guessing. They're citing longer days on market, more price cuts, and fading demand, especially in pandemic boomtowns. This is from their latest report. Demand is weakening across many markets. Listings are staying active longer, and homes that do sell are often doing so below list price. And even when Zillow is bearish, believe them. But if you don't, just take a moment to look at the builders, because home builder confidence hit a 3-year low in May, while 34% of builders slashed prices. That's the highest since 2023. So how does this all end? Well, there are only 3 ways out of this mess, in my opinion. The first one being a serious drop in mortgage interest rates. The second one, incomes explode, which is also extremely unlikely. And the third one, prices end up falling. Guess what? They already are. In April 2025, 27 states saw home value declines. And this is the only way affordability comes back, not with 2% declines. We're talking about 10 to 25% in some markets, because really that's what it takes to close the gap between what sellers want and what buyers can actually pay. This is not a theory. It's not a forecast. We're seeing a correction in real estate prices already. And depending on the area where you may be, you're going to see that correction even deeper. If you're a buyer, patience is power. This might actually be a pretty decent market for you to test the waters. Or maybe you want to wait a little bit longer, because it might be even getting somewhat better for you down the road. And if you're a seller, then you need to be realistic that you're not going to be selling your home for the same values or the same prices that people were selling them back in 2023 and even 2024. All right, guys, that's basically the end of the video. Let me know what you think. And if you want me to do a price trend or analysis on your city, just drop your zip code or your county or your city in the comment box below, and I'll be more than happy to do a video on it and let you know what I think about what's going on in your area. If you like the video, just like it, subscribe to the channel, and I'll see you guys soon. Take care.